街頭，抹去雨水，雙眼無辜地仰望，望向孤單的晚燈，是那傷感的記憶。再次泛起心裏無數的思念，已換片刻歡笑仍掛在臉上，願你此刻可會知，是我衷心的說聲喜歡你，那雙眼動人，笑聲更迷人。
Everyone, did you have a great celebration for National Day? Okay, thanks everyone for being here. Wow, it's really exciting to see all of you actually spending your public holiday with me and continue to learn from us. Fantastic. Okay, so can you guys hear me? Oh, thanks. Yes. Yeah, I love this song from Deng Ziqi Jam, right? I really love this song. Yes. Some of you guys say it's so retro. You still prefer Beyond's version. Okay, nice. I love both Beyond and Deng Ziqi. And yeah, I really like how she really like transform the song again and make it to be such a song that is so popular actually just about 1 year ago, but now it's still popular. All right, so yeah, hi everyone. So if you can hear me, right, please type yes. All right, so that I just want to make sure everyone is able to hear me before we get started. I just have a very out sudden thoughts of because today my team challenged me. They say, "Hey, Chloe, you gotta make today's episode fun." You see, like because people tuning in on their public holiday to learn from you, you gotta perform. So, but I also want to ask whether you guys want to see my performance. If you don't want to see my performance, I think also no point to perform. But yeah, so just now I was playing that song, right? So anybody like really want to listen to me singing? Okay, just sing like maybe part of it just for a performance sake, so that I can complete my team challenge. If you would like me to go and sing just for a small portion, okay, of course my voice not as good as Deng Ziqi. If not, I will be a singer already. Okay, wow, Wendy, go perform. Yeah, because she is the one who challenged me. That's why she said definitely you need to go and perform, right? Wow, you like Snorlax. Yeah, I also love this Snorlax. Oh yeah, it's the very sing the song. Okay, thanks, Wendy. I can see some of you guys say yes. Okay, so I am just going to take this challenge for a while. So the beginning of this presentation, I just want to make it to be a very relaxing type. Yeah, I'm just going to sing half of the song and make you guys, all of you, happy before we start this learning session together. All right. So wow. Okay, thanks. Yes, please. Thank you. Okay, now you're making me nervous. Okay, but don't have high expectation. My voice, there's not very good one. So okay, I'm just going to sing a little bit. I have the 伴奏 type. Oh my god, my voice. I haven't been going to KTV for the longest time. Wendy. Okay, now let's get started. I'm just going to sing half, okay? 哇，很紧张哎，大家，我很久没有唱歌了。細雨大風濕透黃昏的街道，抹去雨水，雙眼無辜的仰望，望向孤單的晚燈，是那傷感的記憶。再次泛起心裏無數的思念，以望片刻歡笑仍掛在面上，願你此刻可會知，是我衷心的說聲。If you know how to sing, can sing with me. 你那雙眼動人，笑聲更迷人，願再可輕撫你那可愛面容，挽手說夢話，像昨天你共我。Okay, that's all. All right, I hope you guys love this random performance and the challenge accepted by Wendy. All right, thanks everyone. Thanks everyone for listening to my performance. I hope you like it, and I hope that it cheer up your evening. I really had a great day today. I went to the National Museum because they have this 1 year free membership. I just go there and check it out. I saw so many Singaporeans there, and I'm so happy that yesterday the firework was so nice. Okay, I didn't watch it. My friend Felicia, she actually went there and she sent me this very nice video recording of that firework. If you guys went to the firework yesterday, right? Please type firework and let me know whether is it really nice. I think based on the photo, based on that video itself, I think, oh my god, I regretted I didn't go. So I hope you guys enjoy it. All right, thank you so much. Wow, arigatou gozaimasu. Okay, so with that, let's get started. Okay, tonight I have a lot to cover. In fact, the presentation I'm covering tonight, I wanted to cover it last week, but I thought that the ETF was really more apt because I just covered the ETF workshop not long ago. If you guys have not watched the ETF workshop, yeah, so you missed it. So sorry about it. But tonight I'm going to share with you one of that stock that I just bought last week as well, okay? Because it's a real investment. That's why I also want to share with you my thought process. Why did I decide to enter this position? And if you love to hear the real thing, right, please type REAL, okay, real. Okay, once again, wow, thank you so much. Thank you. Oh, maybe I should start my episode next time singing another song, okay? You guys can order the song. I will go and practice it. Thanks. All right, let's get started. So tonight, this is a banking real trade. I invested just last week, and a lot of people are really fearing in terms of the market right now. Wow, there's so many uncertainties ongoing. If you have the fear, please let me know, type fear. In the meantime, I do see the banking stock really drop tremendously since COVID-19 started. In fact, if I'm not wrong, in general, they dropped by at least like 25 to 30%. So are banks in trouble? Okay, so this is part one of the episode. I do want to continue this series for a while because we do have a lot of good banking stocks or in-depth analysis I want to share with you. So if you enjoy it to be an episode, to be a series, right, please type series. Okay, today is just first part of the series that I want to go deeper into banks. And I know that in general, people love, Singaporeans really love to invest in banks because they are really solid companies and they also can give very good dividend, right? So that's why this time, is it a good time to invest in banks right now? Okay, so I'm just going to cover with you what is my thought process. But once again, this is just my thought process. I could be wrong. So whatever that I am sharing right here is really for your education. Whatever that Next Level All-Stars are sharing, it's our mission because we really want to empower more people to educate them how can they invest safely. All right. So if you want more additional investing tips or business tips that I constantly share every day, you can check out my Telegram channel, which is bit.ly/business and invest. So you can follow on my Telegram channel where I post actually daily updates on that. Okay, so let's get started. Okay, I can see that a lot of you guys want it to be a series. Okay, then I will make it to be a series for you. All right. So next is the interest rate. Okay, because when you talk about banks, right, you need to really think of it. Because one thing in correlation directly to banks is how well is the banks going to perform will be the interest rate. So anybody know what is the interest rate as of this time, no, as of today, right? Let's use US as the benchmark, okay? The Fed, right? The federal funds rate. What is the percentage? Anybody know? If you know the answer, please key in your answer and so that everybody can learn together. And the reason why, because interest rate does affect banks a lot. Later on, I will cover much more in depth how does the interest rate affect the banks, affect its performance, affect its earning. So that's why if you want to invest in banks, you also need to be more aware of that economic situation, especially how is the interest rate going to be. All right. So anybody know which is interest rate? I believe you guys know that it has been dropping a lot, right? But you probably wouldn't guess how low it is today. Ta 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 ta. I'm going to have my sound effect. The interest rate, it's like zero. Okay, it's almost zero. Okay, sometimes like 0 to 0.25%, but it's basically almost zero lah. So you can see that actually 2008, that during the financial crisis, it was adjusted to zero. And once again, when the COVID situation hit, okay, it's really deemed as another crisis. And that's why Fed adjusted it back to zero again, okay? So 1%, even less than 1%, Calvin, it's like zero right now. So what is the reason? So before I go into how does the interest rate affect the banking sector, let me explain a little bit more in a broader perspective in terms of why does the Fed government want to change interest rate, and how is the changing in interest rate affect the economy? Okay, these are very good economy lessons to learn so that you definitely can invest with a more micro and macro perspective as well. All right, so let's get started. Why do interest rates change, right? The reason why the Fed government will always change interest rate accordingly is because this is the way for them to really control the price stability and to see whether they can adjust the economy so that it's sustainable, all right? So when the interest rate when the economy is not doing well, what would the Fed government want to do? They generally want to lower the interest rate in order, because when you have a lower interest rate, what does it mean? It means that borrowing becomes cheaper. Okay, you can do business with less debt because whatever debt that you borrow, right, the interest incurred will be much lesser compared to if it's a high interest rate, right? So when borrowing becomes cheaper, it really encourage like investing and borrowing and so that the economy will start to start the engine running again, right? So that is the reason why they decide to lower interest rate. So on the other hand, when the economy is doing very well, it's growing very, very fast, right? The Fed will increase the interest rate so that the borrowing become more expensive. They can slow down that inflation, because when the economy is doing so well, the prices will generally get to inflate, right? People have more, they have more buying power, they have more money now. We have more money, but at the same time, the goods are like the quantity are so limited. So that's why the goods will be jack up the price. So that's why there will be inflation. So in order to slow down inflation, that's how the Fed will raise the interest rate, and as a result, make the growth become more sustainable, right? So so Louis said, wow, so if 0% interest rate, bank earn what? Okay, so that's why tonight we are going to cover this topic. Is this the bad time to invest in banks right now? Are banks in trouble? Okay. Wow, Kelvin. Wow, amazing, right? I also didn't expect to drop to almost zero. Okay, now, right, they don't really give a very specific say, hey, this is zero. Instead, they give you a range. Okay, since the financial crisis back in 2008, they decided to give a range instead of a specific interest rate number. So now the range is 0% to 0.25%, which is really almost close to zero. So we can just take it to be like zero, right? So and the reason why they did this, the Fed also explained, because the public health crisis will definitely hamper the economy development, and that's why unemployment rate is increasing. They do want to lower the interest rate so that the economy can recover faster. And they also said that, hey, they are not sure when are they going to revise the interest rate again. They do want to maintain this target range, which is the 0 to 0.25%. They do want to maintain this target range until it is confident that the economy has weathered through the recent crisis. All right, so do expect this interest rate to be staying here for a while, because there is no proper solution yet. There's no vaccine coming out yet. The COVID-19 is still spreading. So that's why do expect this situation to persist for a while more, right? So in the meantime, how has the local banks been affected, right? So we all know that Sue said lower interest rate encourage spending. Yes, exactly. Okay, so so that's why with lower interest rate, how has it affected the local banks? Okay, so just now, whatever the interest rate that I just mentioned was based on the Fed, right? Based on the US. In fact, the local banks, the local government has also been affected as well, right? So we can see that recently, I realized that I use this OCBC 360 account. So in the past, they said it's like about 3.2 or 3.6% interest if you satisfy several criteria. So recently, when I checked on OCBC again, I realized that, how come my interest rate got reduced from 3 point something to now 2 point something? Okay, so they still give you 2 point something percent interest. Actually, it's not zero completely, but nevertheless, they are really cutting. Okay, they are really cutting on this interest rate. So the amount that money that you put in right now in the bank, the interest rate will be even lesser, regardless whether you save it in normal saving account or you put it in a 360 saving account. Okay, everything is going to be cut, right? So based on July, you can see July 2020, the interest rate, it's about 0.44. All right. So previously, June, last month was 0.56. So once again, July, it got reduced. So of course, it's not a very, very good sign for banks, because like what some of you mentioned earlier, why if the interest rate is so low, how the banks are going to make money, right? So that's why tonight we are going to explain to you exactly what is my thought process. You can disagree with me or you can agree with me, it doesn't matter. But most importantly, I want you to learn my thought process and decide for yourself whether is it something that maybe it's worth looking at for yourself. Okay, remember, whatever that we share is for education. Please do your due diligence before you decide to invest in anything. Okay, anything. Okay, so that is the first thing I want to highlight. So is this a good time to invest in banks right now. And because I only have 1 hour, I'm just going to delve deeper into one of the bank, okay? Because we have 3 big banks in Singapore, right? OCBC, UOB, and DBS, okay? I believe everybody has a DBS account. But tonight, I'm going to share with we start with UOB first, all right? UOB, for your info, yes, UOB one also cut. I also know. Because I also have that account, the UOB one saving account. I also have one. That also got cut. Yeah, so everybody got cut. Every banks will definitely be affected. Okay, because it's a nationwide, it's a global-wide issue. All right. So firstly, in order for us to understand whether is this a good time to invest in banks right now, it's good to understand, is this a good bank to invest in the first place? Right? Because if it's not a good bank, that means the balance sheet is bad, it's taking on too much debt, then it's a very, very risky bank to invest in. And remember, we do not want to invest in anything that is risky because depends on your personal appetite, but I personally don't really like to invest in some things that has a lot of that very high risk, because at the end of the day, it's my money. I want to make sure I'm investing it in a very safe manner and grow my portfolio steadily. All right, so the first thing that you want to check is it a good bank to invest? So there are certain criteria that I'll be sharing with you throughout this webinar. Do take down some notes, because I know that some of the things you probably have never heard of it before, and it's very, very good knowledge and information for you to equip before you invest in the next bank. All right. So, but before I go into that, I'm just very curious, how many of you have actually bought any banking stocks lately, or maybe in the past you actually bought? Okay, if you have bought certain banking stocks before, please type the ticker symbol here. If it's UOB, then just type UOB, like easier, rather than using the ticker symbol in Singapore. But if it's a BAC, like Bank of America, or if it's a Wells Fargo, you can also just type the name, the ticker symbol, or the name in the chat, so that I know, hey, some of you probably are already banking investors. So what should you be taking note before you decide to add in more positions or what? All right. So the first thing that you want to look at, okay, is whether has the bank been growing in its deposits. Okay, so what does that mean? Because one of the ways that banks really get to earn money is through people giving them money, right? Because that's how banks earn money. When you deposit money into the bank, they can use this money wisely and lend this money out as loan, and that's how they earn that interest different, right? So that is the net interest margin that we are going to cover later. But when there are more pool of cash available to the banks, definitely it's a good news, because that's how the bank have more cash to utilize and to lend it for investment or do some other investment on its own. So the first thing we do want to look at is, has the deposits been growing over time? All right, if it has been steady growing, then that means it's a very good sign. That means people in general like this bank, they like the service, they also have trust and faith in this bank, right? So that is number one thing. Okay, I can see some of you invested in Bank of China as well. Okay, BAC, Maybank, Wells Fargo. Okay, are we? Yes. Oh my God, I'm not sharing any slides. What am I doing? Okay, I've been talking nonstop, and I realized that I didn't see any slides. Thanks. I didn't share any slides. Thanks so much for reminding me. Okay, thanks. All right, so now I'm going to switch on the slides, and wow, fantastic. Thanks for letting me know, because that's how everything is going to be laid out step by step for you. So the first one, thank you for reminding me. All right, so David, arigato. USB, some of you, OCBC, DBS, OBC. Oh yeah, a lot of you invest in local banks. All right, so tonight I'm just going to cover UOB first. Okay, let's make it a series. I prefer see Kevin prefer to see my face. Thank you. You still have the screen corner of my face. All right, so that's the first one. So let's look at UOB, all right? How has the trend been growing for UOB in terms of the amount of money being deposited into UOB? So you can see this is the blue color. If you see the blue color, which is the the deposit amount, okay, over time it has actually been growing. The first thing I'm showing you is based on 2019 annual report. All right. So later on, I'm going to share with you the quarterly report of 2020. But before that, let's go through the past few years first to see how has the bank been performing for UOB. So firstly, you can see that, hey, it's actually a very steady, healthy growth, right? Deposit has been growing. That means people really generally trust UOB, and they also love to put their money into UOB. They love the services, and that's why it has been growing over time. So that's a very good thing that you need to be taking note of before you invest in any bank, whether there's any growth. So you can see customer deposits have been actually grew 6%. To 311 billion, okay, 300 over billion from 2018 to 2019. So they are comparing 2018 to 2019. It's a 6% growth. And in the meantime, you can see that the net customer loans, so that means they use that deposit to lend out some, right? They lend out, it also has been growing. So when they lend out more loans, what does that mean? They can collect more interest income, correct? They always earn between the spread, right? So it's also a good sign. So you can see that another thing that is very good to take note of is the loan to deposit ratio. What does that mean? Is for every $1 of the deposit that you have, how much do you lend out as loan? So if you have only $1 of deposit and you lend out $1 as loan, that is 100%, okay? So it's not exactly a very good thing because you basically have no balance left. Okay. On the other hand, sometimes in the past, before the 2008 financial crisis, right, a lot of banks are doing something that is very risky. They only have like $1 of loan, but they only have $1 of deposit, but they could be lending more than $1. So that is very risky, and that's why when the economic crash, some of the banks couldn't really hold. Like Lehman Brothers also went for bankrupt, right? So that's why the first thing that you want to the second thing you want to check is, has it been healthy range? So the loan to deposit ratio, the range, right, consider healthy is about 80 to 90%. Okay, don't be over 90% because that is a little bit on the high side. So 80 to 90% is considered a healthy range. All right. So that is the two criteria that you should be checking. All right. So the second thing is today. So Elaine, so today, actually our show, right, we do have fixed timing for investing. We also have fixed timing for business. So, but occasionally we will actually rotate between different speakers. All right. So today will be me instead of Sean. I know that Sean will be back. He will be back. Okay, don't worry. Why am I so excited for? So the second thing is net interest margin. Okay, remember just now I mentioned that the way that banks makes money most of the time is through earning interest, right? The fatter the interest margin, the better it is. That means if I can get the deposit I only need to pay my customer because you deposit money in my bank, I only need to give you 1%. On the other hand, if I can lend out this money to my borrowers at like 5%, that means I'm earning a difference of 4%. So it's a very good thing. The fatter the margin, definitely the more money the banks get to earn, right? So you can see that this is the net interest. Okay, so the total income. Okay, the second thing I want to show you is this net interest income grew 6%. Okay, so what does that mean is basically through, remember, interest is the money that the banks make. And that can be considered their revenue, right? So we do want to see that net interest income has been growing over time. That means the difference, they have been earning more and more. So this is a good sign. And the total income, basically, it's from non-interest related and interest related income that the UOB is able to get. So what is non-interest income? There are certain other things that make the bank make money. For example, charges, fees incurred. For example, if you have any late interest, late credit card bill, right? You are late, they will charge you for a penalty fee. So that will be considered non-interest income, but it's a fee. It's a revenue for them. Another way is if you invest in certain investment related product, and they will actually take certain of your portfolio as a commission. So that commission is also non-interest related, but it's also another form of income for them. So you can see that the net fee and the commission income has also been increasing about 3%. Actually, every single year has been increasing pretty steadily. So in my opinion, I think it's a very, very good sign until 2020. So later, let's take a look at 2020. So let's analyze 2019 first, all right? So another thing that you want to look at is the loan portfolio, because for the bank to loan out money, you really want to make sure this bank is not concentrating on just 1 to 2 type of loans, right? Because if just like our portfolio, right, no matter how bullish we are towards this stock, no matter how I think, wow, this stock has so much potential to grow, right, I'm not going to put all my money into 1 or 2 single stocks, because that is too risky. It's always about diversifying, right? So loan portfolio, once again, it's the concept of diversification. Is the bank being diversified in lending out money? Because if it is, then it's much better than concentrated lending. Because if it's concentrated lending, let's say this bank only focus on lending money for home buyers, okay, mortgage, right? Then if the property market is not doing well, a lot of people are going to default their loan, and that's how this bank will be severely affected, and we don't want that to happen. That's why we do want a diversified portfolio, okay? If you understand the meaning of diversified loan portfolio, please type diversify, all right? So yes, right. Elaine also said annual credit card fee, it's also their earning. Okay, that is annual credit card fee. It's non-interest, it's not interest related, but it's an income stream for them as well. All right. So I think they charge the merchant more and earn more from the merchant. Okay, thanks for Leo. Yeah, thanks for reminding me to pay my credit card bill. Almost late. Okay. Wow, you just saved about $100 because you watched this webinar. Fantastic. Okay, so let's see. For UOB, you can see that it's rather diversified, correct? It has loans to transport, storage and communication. It also has loans to building and construction, manufacturing, financial institutions, general commerce like businesses, and they also has housing loans or lending money to private and individual person, right? So that's why all these add up together actually is considered a relatively pretty diversified portfolio. And another thing that I quite like is not only is it diversified in terms of different type of loan, it's also diversified in terms of different region, right? It has Singapore, it also has Malaysia, Thailand, Greater China, Indonesia, and other parts of the world, right? So its loan portfolio, in my opinion, it's considered diversified, and I really like the fact that its type are diversified. The country, the regions that they are lending out, it's also diversified. So that is a second, the third thing that I really want to look at before I invest in any banks, all right? So net interest margin. Oh, all right. So for net interest margin, right? What's the healthy range? Because it's really about comparing between different banks and different competitor. So that's why if you are able to find out the net interest margin for UOB and you compare with OCBC and DBS, that will be a more accurate gauge because there's no fixed number. Different countries can be very different. For example, for India, right, their interest rate was so high in the past, like 8% was considered a very, like 8% interest income is considered minimum for them. So different countries operate differently because they do have different government regulations and everything. So that's why compare with peers, industry peers in that same country, rather than having a fixed number for NIM. All right. So that's my answer to that. So yeah. So the fourth thing that it's good to look at, it's called non-performing loans. Okay, what does non-performing loans mean? It means like when you as a bank, you lend out money. Let's say you lend to your friend, okay, and you're a very good friend, that person in need for money, and when you lend out, there's a possibility that this person is not going to return you the money, right? Because no matter how many times you call him, or the friend decide to not pick up your call, stop replying to your text, and then just went MIA. So in that case, eventually you are not going to collect back the money that you lend out to that person. So it will eventually be considered write-off. That means you have to just consider this money donated to charity. So in this case, for banks, it's also the same thing. That means these borrowers, right, they refuse to make any single payment within this period, usually about 90 days to 180 days. So if they don't make any form of repayment in this period of time, it's considered non-performing loan. So it's very likely that the debts are going to be write off because the banks just have to suck them, right? So our criteria is non-performing loan ratio should be less than 2%, right? Anything higher than that means it's not really considered a very good banks, because probably their lending regulation, their system is very loose, okay, which happened in the past back in 2008. So that's why now actually a lot of banks are getting so much more stringent in their lending, in checking the criteria. So actually it's a very good thing what happened in 2008. Everybody learned its lesson, right? So you can see for non-performing loan ratio, these are the trend across all this year from 2015 to 2019. Generally, it's about 1.5%. Okay, so that's below the 2% benchmark, which I think it's still a very healthy range. All right. Okay, so the next thing, okay, up after non-perform is definition of standardized. Yeah, it's standardized. So depends on the bank. So maybe they will have a different period of time to be considered to be non-performing loan, but the definition is definitely standardized across all banks. All right. So the next thing that we want to look at is return on asset, right? And ROA really tells us, especially related to financial sectors like banks, right? Instead of using ROE, we actually want to look at ROA, because bank itself, it's a very unique industry where they actually get the money from the consumers. They deposit. This deposit is considered actually debt to them, right? Because eventually consumer need to withdraw and they return the money back to them. So it's considered a debt. So that's why instead of using ROE, you should be looking at ROA, because ROA includes everything, include all the liabilities that the debt that this bank has. So it tells us how effectively is this company, this bank, using its asset to generate income. So the more efficient it is, then definitely the higher the ROA. So actually, according to Warren Buffett, he says that if the bank, right, have 30% of ROA, it's actually considered a very good benchmark. Does anybody know this number? What did Warren Buffett say about ROA for banking sector? Okay, anybody know? UOB now is below PB1. Okay, this one we shall see. Okay, later on I will cover one method that I use for valuating banks. All right, so 1.3. Wow, Lam Wai, you are very, very spot on. You are a fan of Warren. Okay, indeed. Okay, Warren Buffett said this. Okay, so he said that a bank that earns like 1.3 or 1.4% on assets, which is ROA, is going to end up selling above its tangible book value. Okay, what does that mean? Is you come positively by Warren means that if it's a bank that runs so efficiently, right, it's very hard for you to get it below PB less than 1, right? So on the other hand, if it's only like the ROA is like 0.5 or 0.6%, then it's not going to sell on a very high price. So this is what Warren Buffett said. You can go and Google more in depth. So at that time when he was talking about it, Wells Fargo, US Bancorp, which these two companies, he also had it inside his portfolio. They do have a generally high return on assets, and that's why back then Wells Fargo and US Bancorp was really like the price was really on the high side, right? So of course now it's also being affected because it's a global situation right now with the pandemic, right? So let's take a look at ROA of UOB throughout all this year. In general, it's not as high as the 1.3%, but in my opinion, it's considered relatively decent because it's almost 1%, right? So 1.03, 0.95, generally it's about 1%. So actually, it's considered relatively a decent performance based on ROA as well. Of course, it's not as high as 1.3. If you can find a bank that's as high as 1.3, that's fantastic. But 1% to me is actually a very decent return as well. Okay, so Jack says 5%. 5% is it's very, very hard for banks to achieve 5%. So in general, other sectors you can have more than 5 to 6%, but not for banking or financial industry in general. All right. So this is what we have covered until now for 2019, okay? Because pandemic happened, 2020 is a totally different change game. But before I cover that, I do want to encourage you guys to share this video out so that more people get to benefit in terms of, hey, as a Singaporeans, if you want to invest in banks, do you just consider dividends or not? Because I do see that most of the time people talk about it, hey, I invest in this bank because I get very high dividend, or I invest in this company because I get very high dividend. That is not the best approach, because sometimes if it's a company that just want to bait you into investing, they can give you very high dividend, but actually the company is not doing well, right? So that's why we do want to educate more people. So help us share. Okay, if we have like 30 shares, right, I also want to give you a gift at the very end. Okay, please help us share. If you have shared, please type share in the comment section as well. So in the meantime, I'm just going to answer more questions. So for ROE, for banks, we don't really need to look at ROE, because it's ROE basically excludes debts. There's no debts inside. It's just the equity, the shareholder equity. So banking is very, very unique industry. It actually operates based on that. So that's why you should look at ROA instead of ROE instead. Okay, so yeah, do let me know if you have shared. Let me know, just type shared, all right? So let me see, which Singapore banks has the highest fee income relative to interest income? So Lim, Mr. Lim. Okay, Mr. Lim is asking this question. So for this episode, I'm just going to cover UOB, because it's going to be a series. So stay tuned. I will be covering much more in depth into the other two banks in Singapore as well. Then in the end, let's do a comparison together, and you can make the decision for yourself whether is it a good time to invest. All right. So yay! Thank you. So many people shared. Arigato. Okay. Let's go on, yeah? So I do have a gift for you, because you help us share and reach out to more people. Okay, so let's take a look at UOB Q2, because it has been like half a year since 2020, right? So let's take a look at Q2, and inside Q2, you will also see the Q1 results as well. And let's make a comparison and see, hey, is UOB in trouble? Is this a good time to invest, all right? So firstly, everything information that I put it here, it's all from the quarterly earning report. Just now was from the annual report. All the information, you can find it. All you need to do is to Control F and find the keywords that I just mentioned. So let's take a look at UOB for quarter Q2 net interest income. You can see that it has been actually dropping, right? From Q1, okay, 2019 2Q. That means that's the second quarter of 2019. That is 1653, right? But in this quarter, Q2 2020, it's only 1456. So the interest income has been decreasing. And Q2 compared to Q1, okay, 1Q, you can see on Q1, right, it's 1593, right? But then it actually dropped more on Q2 as well. So in general, you can see that actually all the figures has been dropping. Let me just make it like slightly, I can mouse over so that it's easier for you to see, right? So this figure compared to this figure, it's dropping, okay? Then Q2 compared to Q1, it's also dropping, right? So for what is 1H19, 1H20, basically it's a half a year, right? So half a year result, it has also decreased because of the COVID situation, obviously, because the interest rate has been decreasing, and that's why the net interest income, it's become lower and lower, and that's why they can't earn as much as it used to be, right? So in the meantime, we can look at okay, I was trying to do this total income, right? So total income of including whether it's interest income or non-interest income related, it has been dropping all the way as well. Okay, so not a very good sign. And net profit after tax, let's take a look at the final net profit. It has been dropping as well. Okay, so indeed you can see that the banking sector in general, actually not just UOB, next week and 2 weeks later, we are going to look at two other banks, right? They also have this similar situation they are facing. Okay, but I also want to highlight something that, in my opinion, it could be a good sign, okay? Despite these lower interest income, lowering margin that they are having as a bank, right? What I like to see is, in fact, in fact, even during this period of time, more and more people are putting money in the bank. Okay, the deposits has been growing. Okay, you can see that Q2, okay, the customer deposit is this number, and it's higher compared to 1 year ago, Q2 of 2019. It's growing, right? And then compared to Q1 of 2020, it has also been growing as well. So it does show that people in general really still want to deposit money in the bank. Okay, do you deposit money in the bank? If you do deposit money in the bank, right, please type deposit, because in general, people still have a lot of faith in these financial institutions. If they just put the money inside their safe or below their bed, it's not going to be very helpful, right? And people in general, they also don't really know how to invest properly. So that's why they still prefer putting their cash into either deposits or they put inside fixed D. Right, so that's what I observe in generally what my Singaporean friends, they like to do. They really like to put money, saving, and then fix D, right? So that's all, right? So since interest rate is low, are you investing in UOB? Okay, so later on I will share a little bit more about my investment position. All right. So what platform what platform do you use to invest in local banks? So actually all these, right, all these like local companies, you can just use any local brokerage firm. So for myself, I use CIMB. Okay, different people use different, like for Sean, I think he used Poems. So depends on you. You just open an account with any local brokerage, you can just invest. And the best thing is you can even use CPF. If you're Singaporean, you're PR, you can use CPF money to invest in these companies as well. Okay, so what I like to see is it's growing deposits and the gross customer loan. So has the customer been continuously borrowing from the banks? Okay, in fact, it has been increasing as well. So that's why I think actually relatively it's not in such a bad shape. But because of the net interest income, the margin is dropping, and that's why the bank earn much less compared to in the past. But actually the foundation wise, to me, is still solid. All right. So the net interest margin, you can see, has been dropping, right? From Q1 is 1.71. Now it dropped to 1.48, right? So compared to 1 year ago, it also dropped, right? So that's why that is the main reason why the banks are not making as much as money as it used to be. So let's look at the non-performing ratio, because we must be mindful whether are people defaulting loans. Okay, we don't want people to default that much, right? So you can see that it's still about 1.5 to 1.6%. So it's still in a very healthy range. So in my opinion, I don't think UOB is in any financial difficulty. In fact, it's just this period of time because of the margin is dropping, and that's why they earn less. But people are still depositing, people are still borrowing money from them. So long term, you give it time, I think it has a lot more room for growth. All right. So let's take a look at another one. Okay, so you want to see on the ROA, right? So of course, during this period of time, ROA was severely impacted. So it actually dropped from, remember just now it was close to 1%. Now it's about like 0.65. So not exactly the best return on their assets, right? And loan to deposit ratio, we want to make sure that this is a healthy range of 80 to 90%. So this is also healthy. So once again, when you decide to invest in any banking sector or any banks right now, you want to ask yourself, are you willing to, firstly, are you positive about the economy outlook? Do you think that this crisis, this pandemic is going to be over? We will eventually overcome it. Okay, give it time, maybe 2 years, 3 years down the road. Do you think that we are going to recover from this pandemic? Okay, if you do believe that we are going to recover, please type recover. All right, because that will determine how positive you are towards the economic outlook given time, right? So for myself, I do believe that we have seen so many pandemic, we have seen so many crises, disease break out, but eventually we manage to control it and live with it. Okay, if we can't really find a cure, but we live with it, right? Just like how we live with dengue and stuff. But that's why I believe we in general give it time, the economy will recover. And when the economy recover, right, banks are also the first one to recover fast as well, okay, because that's how the trend has been, right? So that's why you can see that since February this year, it has really dropped like close to 25% for UOB. So current price is about like 19.58. So one of the things that you want to consider is, hey, if this is still a solid bank in terms of the lending, the borrowing, it's in a healthy range, people are still depositing money, the banks are still able to lend out loans, right? So if it's still a healthy balance sheet, right, then you should, next question is, hey, is this the right price to enter, right? So if you can see that based on the current price right now, which is today, 7th of August. So let's take a look at today. UOB stock price. Oh, yeah. So, same. Oh, yeah, because 7th August was Friday and today is public holiday, so that's why it never open market. Oh, yeah, so it's the same screen, 19.58. So the dividend yield right now, it's about 5.62%, okay? And that's when you go to the dividend yield, okay? Not go to the dividend yield straight away and go and buy, because we always want to make sure we do the correct analysis first. If it's a good company, then we consider to buy based on different valuation method. So dividend yield give you about 5.62% per annum. Which do you think is decent? If you think 5.62% is considered decent, right? Please type decent, okay? So that I know your level of, hey, is this a good return or not? Okay, because different people do have a different expectation of their return. Okay, so we recover. Okay, Sue think that economy is going to recover. It's just a matter of time, right? So Eddie also think recover. Okay, I withdraw to buy shares. What do you mean? Surely you don't want to buy share? Is that what you mean? Okay, Lam Wai is not spending so much. Okay, so Gordon is any reason for higher growth in customer deposits? Maybe you can ask yourself, for yourself, why do you put money in a bank? Maybe because every month, okay, I believe most of you guys are still working, right? So be it you have a business or be it you are working, you do have monthly income coming in. Are you going to spend all of them? Right? For me, I'm not because the income that I'm coming in, I do want to put it in a bank for any potential investment opportunity. So I put in the bank. I don't do fixed D because fixed D lock me up. I do want to have a flexibility, so that's why I put in relatively higher interest account like OCBC 360 and all this, right? But immediately when I see opportunities, I can withdraw my cash and fund my investment account. So I will still put in because I have my active income every month, right? So I believe not all of you will go and spend right away, right? So that's why no matter what, you will still save, right? You will still save for your own self, for your own livings and everything, right? So then decent, okay. So some of you think it's decent. Some of you say, hey, dividend dropped. Okay, in the past it was higher. Yes, in the past it was higher, just like about 1 month ago. Okay, you can see, like back then, it actually dropped to 17, like the lowest point was about $17.50. Okay, so it has actually increased a little bit since March. Okay, but if you think about it, in the past it was close to $26 to $28. Okay, now it's like a 25% drop even at this time, and it's still giving you 5.6% dividend, much better than any form of deposit that you can, fixed deposit that you can ever find. Okay, so that's why for myself, I actually enter UOB 2 times already. The first time was actually in March, okay, when the price really plummeted a lot. I think I entered around this range. And then the second time, I just entered last week, okay, which is pretty similar to the price that you are seeing right now. So in general, my position is already in profit because the first time that I entered was lower, much lower than this price. So in general, it was on the slight profit, but not too much profit yet. But I'm okay because most of the time I am a very long-term investor. I do want to invest in something that is very solid, sound and steady, and I'm willing to own it long-term. Okay, so if you are a long-term investor like me, please type long term. All right. So that is why I decided to enter last week. In fact, just last week. And I'm sharing the real trade position that I am sharing with you right now, and the reason why I decided to enter it. And of course, there's another valuation method that I use to give myself as a confirmation. Is this a good time to enter in terms of apart from dividend? What other valuation method that I use to just give myself that more peace of mind, that to make sure that, hey, I'm entering, be it I'm using this method or that method, is still a very fair value, and that's why I decided to enter, right? So anybody want to know the other method that I use to give me a second confirmation? If you want, right, please type yes. Okay, so this is a gift that I have for you. All right, so type yes if you are you want to know the second confirmation. All right, so I can see a lot of you guys like long-term investor. Fantastic. All right, so yes, okay, yeah, of course, when you invest, right, very, very good. Yeah, Kelvin was saying that you got to think the diversification, right, in terms of the proper approach right now. Of course, whatever things that we do, investing, you have to diversify your portfolio. Okay, even though it gives you 5.6 dividend, 5.6% doesn't mean that you need to go all in. Please don't do that. Please don't do that. Always make sure diversify. Minimally, you should be looking at like minimum 10, okay, 10 to 15 stocks into your portfolio, so that even 1 to 2 are not doing well, and you diversify in terms of different sector, your portfolio is still going to do well over time. Always about diversification. All right, so yes, okay, a lot of you guys say yes, 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 fantastic. Okay, so DCF, PBE, okay, then I will let you know what is it exactly in my own Telegram channel. Okay, like I mentioned, I do share more insights about my own investments, also about how I control my emotion as an investor, because at the end of the day, investing, you can have all the knowledge, but if you don't control your emotion well, then your portfolio is not going to do well in the long term, because probably you are too greedy, or you are taught short term, you are too controlled by your emotion, right? So that's why I will be sharing a lot about mindset, how I control my own psychology, my own emotions, but at the same time, some additional investing tips inside my own Telegram channel. So actually, be it you are a female, or be it you are a guy or girl, feel free to join. But the reason why I want to really encourage, I want to do this for women, is because I want to encourage more women to join this journey. Because as a lady, if you know how to invest for yourself, you are going to become so much more like independent, okay, financially, and you are going to do so well more in different aspects of your life. So that's why I do want to encourage more ladies to join this community as well. So do join, because after this, yes, handsome guy, feel free to join. Okay, Bernard, you're very handsome, right? Okay, feel free to join. Welcome you, welcome. And you have a girlfriend, also invite your girlfriend to come in as well. Okay, so with that, okay, yes, if you have 10 to 15 stocks, right, Elaine, should also include US stocks. So you have 10 to 15 stocks from different countries also can, but make up to be at least 10 to 15 stocks. All right, so with that, I hope you guys enjoy my sharing tonight. That's all I have to share. So once you join, right, later on, maybe like in half an hour or so, I'm just going to type out exactly what is the other method, and I will share with you my analysis in Telegram channel as well. So do join, and I hope to see you guys there. All right, so with that, I wish everybody a great evening, and I will see you next week as well. And yeah, and next week maybe I should sing song as well. So for those who joined from the beginning, I sang a song. All right, so if you do enjoy my singing, I'm going to, like, maybe you can comment, hey, what song you want me to sing? Okay, I'm going to learn it. Okay, so that's it. So good night, everyone, and have a great week ahead. Okay, all right, see you next time. Bye.